Hey everyone, Hana Cassis with the Stock Market Academy. Hope you're having a great weekend. Today's Sunday, June 26th, and seeing some interesting things coming out of China, actually. So I own Baidu, bought it last summer in my retirement account. Generally, I don't trade my retirement account. I did that on purpose just to mitigate whatever activity I do in my brokerage and my Roth IRA. And so I have a broker, and there's big commissions and that's all by design, right? To have someone keep me in check on some longer term investments. I don't want to get active and start trading them. So anyway, I don't look at that account often. And the other day I saw Baidu was up in the last few weeks while everything else was down. And I thought that's interesting. So I looked at Baba, which is a competitor, Alibaba Group. Then I looked at JD.com, another big e-commerce website. And then I looked at some of the rising auto companies like NIO, which is a competitor to Tesla, and Li Auto, which is actually an investor business daily rated auto stock. And I noticed all of China was up. So I dug a little deeper. I ran a relative strength test. This is a chart that shows the performance of one thing versus another. Here we have the S&P 500 versus the iShares MSCI China ETF, which is just a regular China ETF. You can see in the last 40 trading days, it's about 20 trading days a month, uh, we've had in the last 2 months, 40 days, China returning 14, what is this? 15.73%, and the S&P 500 is down 8.76%. So that's like a 22 or 23% swing, right? Relative to uh, China, the S&P is underperforming. And so think of it this way: if you had $10,000 or $1,000 or $100, whatever the case may be, on this date right here, which is April 28th, I believe it starts, and you invested in the S&P, the actual swing in your account would have been $22,000, or it would have been or $2,200 or $220, depending on how much you invested. So that's a really big swing. You might have made 15 and a half, but instead you lost 8. So that's a really big swing in your account. So understanding relative strength is very important. But then that led me to my next question. I remember years ago when I started, oh, by the way, if you want to figure out how to find this on your own, click charts and tools from stockcharts.com, go to perf charts, type in whatever you want separated by commas, and then MHCI, MCHI, okay? And then it'll give you the relative strength of each one. Now you could see in the last 200 trading days, this is the performance. But I noticed this as of recently, which means it could be the start of a new trend. When you go to about 30, 40 days to 2 months, you see that the difference, how China started outperforming the U.S. Uh, in late April, early May. This is when it started breaking away from U.S. stocks about 3 months ago. And the real performance has come in the last 40 days with a significant 22% swing. So that's relative strength of China relative to U.S. stocks right now. It's very strong. J.P. Morgan just put out a notice that said, buy China. Um, there are hedge fund managers. Keith McCullough, I have a friend who follows him pretty religiously. He just tweeted something about being bullish on China. It's exhibiting major relative strength. I love it. I am exposed to China right now. And if you want to see how it actually compares to US, so every major bottom in the last 2 decades, you can see China bottomed October 2008, and then the US continued to bottom until early March. That was actually the first few months, the first 6 months of my trading. And then we had a China bottom in October 2018, and then the US bottomed in December 2018, the day after Trump called all the major CEOs of banks and said, if there was an emergency, I got your back. And everyone was like, well, what the hell? Why would you make that phone call to the heads of all the big banks? And so the market sold off and bottomed that week. And then the China bottom came April of 2022. Uh, maybe. We don't know that yet. And the US bottom could be coming this summer. Remember, there is a major, major trend from the midterm election until the high of the following year. So that means 2022 into the high of 2023. The Dow averages 48.5%. So if you're buying the bottom here, the likelihood that the market rises is high because Biden is probably going to lose his Congress. I'm not talking politics here. I'm talking odds. Okay. Biden loses his Congress. That means there's a stalemate in Washington, D.C. for 2 years. Every time there's a stalemate in Washington, D.C., Wall Street loves it. Why? Because it brings certainty, and certainty brings bullishness. There's no pending potential regulation that the Democrats could possibly push through that will hurt or impair the confidence on Wall Street. And then, so I guess my point is, it looks like China has bottomed. Let's drill down on this right here. I want to show you this. Here we are. So we have from the 2013 low to the high in 2015. If you plot Fibonacci, this is one of the levels. It looks like the 61.8, but might be the 50. I can't tell with the upper shadows, but it is a fib level, and we see that it bounced off of the upper trend line from 2013. So the trend line was plotted here at the low, the October low in 2018. This is what we're looking at right here. And it rallied and it comes down and it hit that imaginary trend line that was drawn into the future at Bollinger, at Fibonacci. It reversed. It recaptured Fibonacci. So this is very bullish. Not looking at this in a silo, let's look at the neighbor, which is not surprisingly as correlated as you would think, the Hong Kong market. But nonetheless, this signals confirmation of what we're seeing in China. We are seeing major, this was in, what month was this in? This was in March. We saw a major reversal followed by some struggling but buying in April, struggling and buying in May. And here in June, we've held so far. This came off of major support from 2016 and recaptured, this was recaptured level that became support. And then we saw price bounce off that level. And this is very bullish for Asian stocks in general because China, Shanghai, and Hong Kong, which depending on who you ask, is or is not part of China, are tend to be the markets that lead Asia. So I personally like the stocks that I follow include Li Auto, and you can see here, let's see here, MHCI. You could do Yin Daily. I actually own this one. Uh, Anyone that's trading this, keep a tight stop. You don't know if it'll pull back, but that's pretty much the primer on China and how it tends to be the leading stock market for the US in every major bottom in the last few decades, how it's exhibiting relative strength. It's going up in the last 2 months while US stocks are going down. And I don't like looking at the media, but when I see something on the chart and then I see something on Twitter from a major company, I tend to think that is a level of confluence too, where it's like, okay, if institutional seeing what I'm seeing and not much of the public is seeing that, then it makes me extra bullish on the opportunity. That's it for now. Thanks for watching.